Good morning, everyone. We are live on YouTube now. Nilanjal, we want to start.
Sure, Aditya. Thank you, and good morning, everyone. I welcome you all for this session of today. Uh, Myself, I am Nilanjan Paul. I am a chartered accountant and have been with the profession for around 15 years now in financial reporting and auditing side. So, just to reiterate for our friends as well as for new joiners, Think Tank is a multidisciplinary global platform and it is a very important part of the India growth story. It focuses on expert series covering in detail about management think tank, valuation think tank, IBC think tank, RERA think tank, and some of the other key think tanks relating to capital markets and similar aspects. The intent of this platform is to share professional knowledge and gain experience. We do share developments and real life examples by eminent panelists. For example, the CEOs, CXOs, specialists, and other professionals having global experience. We have been around for over a decade now. The idea was somewhere conceived around 1991. Uh, the main idea is to have a common platform to share knowledge amongst financial leaders working in leading companies or professionals who are highly skilled in their technical domain. Uh, our participants have rich experience in industry, knowledge, and professions. And we also have a digital team who looks at the digital angle. So, and I welcome and thank my colleagues who look at the digital angle from that side. So, I hope we will have a wonderful session today. Uh, in addition to that, just to sum up, we also have annual report corporate governance strategy awards, which are based on 6 P's: profit, people, planet, professionals, promoters, and platforms. We are in the process of finalizing that, and we hope to share our results pretty soon. I would also like to thank my team, especially Anupam, Aditya, Archana, Aishwarya, Dushyant, some to name some of them, Santosh, Manoj. Uh, Today we have an excellent team of professionals who would be joining us, and I hope that we have an interactive session. Thank you. And with this, if I can request Mr. Kannan to share his views on the recent RBI changes on the monetary policy. And if somebody is willing to ask any question or clarification, please do let us know. We will we will try to schedule some concerns and some clarifications from our side. Over to you, Mr.
Uh,
Kannan. Thank you.
yeah, thank you, Mr. Nilanjan. Good morning, Mr. Manoj, Mr. Aditya, and all our participants in this forum. RBI monetary policy this time, I would say, Governor speech was very, very clear, crystal clear. And not only that, he beautifully summarized 10 points, which we all have to take into consideration going forward. And this 50 basis point increase by RBI was uh, not a surprise. It was expected. And as he clearly said, we are facing with the three issues today. One is this COVID and after effect. And second is this supply chain issues. And third, if we see today, this aggressive stand taken by US Fed and other developing countries, developed countries. In fact, last time when Fed was announcing that they are going to increase the rates, we saw rupee depreciating to 68 rupee 50 paisa. Then, of course, you know that it is not just the action, it is the communication which is very important. So then I think Fed came and said they are not going to increase the rates, but it will be only based on unemployment rate and inflation rate. So they said that it will be indicator based. So that gave some kind of certainty to markets around the world. And of course, our rupee again appreciated to 62 or 63 rupees that time. But this time things are different. If you see world over, generally, these developed countries grow at only 1 to 2% per annum on an average. Maybe US was growing at 3.5%. And their inflation always used to be below 2%. In fact, if you remember right, last time when the global crisis happened, all the countries wanted inflation to reach 2%. It was at 0.5, 1%, etc., etc. In fact, they wanted inflation to be 2% because inflation is required for a country's economic growth. Not only country's economic growth, it is required for even corporate's economic growth. So inflation is necessary, but this time what has happened? All these countries which has a growth potential of only 2%, 3% per annum, they saw the inflation rates going up to 9-10%. 9-10%. So which is unexpected. Your growth rate is going to be 2% and your inflation is 10%. That way, if you see what RBI, I can say that RBI has managed the situation very well in India. You know that still this year the projection is that India is going to be the fastest growing major economy in the world. Of course, there are smaller economies which will grow faster. There are economies which will grow 12%, 14%, 16%, but they are all very small economies. But India, among the major economies, we still will grow for the whole year at more than 6% rate. So, and also the projection for next year and 1 year afterwards for economic growth for India is quite good. We will continue to lead the world in terms of growth. So this 50 basis point is minimum which RBI could have done. And of course, Governor clearly mentioned that it is not only the Fed's action, but it's also Fed's communication. They keep saying, the Fed chief was saying that till we achieve the inflation rate of 2%, we will continue to look at increasing the rates. So right now it is between 3 to 3.25. So at the end of the year, they expect the rate to go up to 4%. Imagine, it was closer to 0%. From 0 to 4, so what will happen now? Generally, the capital flows around the world, capital flows, they move towards countries where interest rates are higher, interest rates go up. And as we know, that US has increased the interest rate so much, a lot of money flowing back to US from countries around the world, not only from India, but from around the world, especially from emerging economies. One good thing was that Governor he talked about an analysis of depreciation of rupee versus dollar, depreciation of other currencies versus dollar. Other currencies depreciated by more than 14%. So compared to that, Indian currency depreciation was much lower thanks to intervention by RBI. And of course, we have to remember that in India, we had a very, very comfortable Forex position, which was more than $600 billion. Now it has come to 536 billion. So governor was saying all the reduction in Forex, if you look at the reasons for reduction Forex, almost 61% of reduction Forex in India is related to foreign exchange rate depreciation. So it has got nothing to do with the real economy, and and we are assured. I can tell you the last 2 years, the management of economy by government has improved by leaps and bounds in the last 2 years. So if you ask why, even though the activities in the economy were lower compared to the COVID, the government was able to collect taxes from individuals, higher taxes from individuals, higher taxes from corporates, and in fact, they reached the potential collection of GST. When we are doing so well in the economy, we are not able to achieve the potential of 1,40,000 crores per month GST. But I can say that government has really used IT in a very, very effective way to ensure that there are no leakages in tax. So that has really come handy for government to increase the spending on capital expenditure. So that is how government went and announced higher capital expenditure this year. And in fact, the governor was saying, generally the capital expenditure by government in the second half is going to be higher than the first half. Of course, they have downgraded the GDP growth numbers for Q3 and Q4, because yesterday the core sector numbers have come, which shows only 3.5% growth. But I can tell you the core sector growth, we should not look at gas and crude oil. So we know that the last 5, 6, 7 years, crude oil and gas, they are showing, of course, gas, it is increasing also, but crude oil showing a decreasing trend in terms of production. In fact, I would suggest that while we are looking at core sector growth, knowing that our reserves are so low in petroleum and output is going down, if you remove that, I think that will give a better picture. I saw coal has gone up by 7%. Yeah. So when I talked about economy management, we know that there was a power crisis. Suddenly all the ministries were put into action. And coal ministry went and told Coal India that you have to produce more. So Coal India actually came up to that level and they started producing more. Tax collections were better. Capital expenditure was good. And now what we read in papers, that this year the automobile sales may be reaching that pre-COVID level. And of course, Mr. Subramaniam, who just retired as Commerce Secretary yesterday, he said that the services sector is booming now. You know, especially after COVID, sectors like after COVID, the sectors like travel, tourism, hospitality, they saw a big fall. So he said that they are ready to pick up, and they are showing signs of progress. And one good thing what we saw, you know, uh, Press Information Bureau releases reports on services exports. So net exports, what they reported earlier, now we find that it is actually higher by $6 billion. Similarly, remittances by Indians from abroad, RBI governor was saying they have gone up by 22%. And one good thing is that now oil prices have come down, and of course the projection by RBI is that for the whole year it might be at $100. I wish that the trend in reduction price of petrol crude should continue, and if it reaches a level of $80, I can tell you well, our exports are growing faster than imports. And in fact, yesterday ministry has said that they don't want to restrict imports. Well, what will happen is that many of these imports are being used for raw material or intermediate goods for exporting the goods from India. So they are saying that we don't want to do that. The effective way of restricting is through higher duties. So that is the opinion. So our external sector is doing well, but the only worry is that the cost of oil. So going forward, if we see what RBI, there's expectation that RBI might increase another 50 basis points if Fed is going to increase the rates. That's one. Second, in terms of banking, what we see in the last 2-3 months, before COVID, not even before COVID, before 5 years, banking credit was growing at 16 to 17% per annum. Then slowly that growth came down to 10, 9, 8, and of course it became negative during COVID. But now in the last 2-3 months, we find that banking, the credit growth is around 15-16%. One good thing is that most of the public sector banks, they had provided for old NPAs, and right now the NPA level is at a manageable level of less than 5%. And in fact, what will happen is that there are recoveries happening. So we should not be surprised that some of the NPAs they wrote off, the money comes back, it will get added to the profit of the banks. In fact, the finance minister encouraging public sector banks to go and lend money to corporates. So the only factor which has to be considered is revival of MSMEs. So after COVID, and of course some of the action due to government, this MSME competitiveness came down. We know that many MSMEs are still closed. Of course, the operating MSMEs, they are able to avail the extended credit by government. So they started doing well now. So let us hope that the MSMEs which are closed, they also come into operation, and services like hospitality, tourism. So let them pick up. So what we will see is that going forward, one good thing is that Indian economy, in fact, the governor was saying the rate decision is based on what is happening in the domestic economy, not abroad. So far the indicators are that many sectors are doing well today. And of course, they are not up to what we have seen before COVID, but they will pick up. And he also said that this month central government employees will get DA arrears and all. So the government employees are one major consumer segment. So whenever they get a lot of money in their hand, it goes towards consumption. And what we also found, the companies like Amazon and Flipkart, the sales this season for them was much higher than last year, and I think they have set records. So, so if you ask RBI, and of course, RBI is also floating a paper. One on right now, our system of recognizing NPA is based on only after NPA occurs, we report NPA. But RBI is floating a paper whereby they say expected provisioning from NPA. NPA has not happened, but what is the probability of NPA happening? Based on that, you provide. That is one. Second, RBI was saying that the regional rural banks, I can tell you that one of the reasons why India continues to do well also, now the Prime Minister has extended the free food ration for 80 crore people up to the end of December. So these 80 crore people will get 5 kg ration free. That is one reason why inflation also not going up. The 80 crore people are covered under government security. So to that extent, these products, we have not seen prices going up. So they'll be covered. So now the regional rural banks also digitization they are talking about. And third, we know that securitization of bank loans. Last year, RBI floated a paper, but this time they are talking about securitization of NPAs. So maybe they are targeting the vulture funds, the foreign funds, which are operating in this area. So once you create a framework for securitization of NPA, then these funds can come and invest. And in terms of liquidity, there was a concern about liquidity in the system. And RBI governor clearly explained that there is no issue on liquidity. Even today, if you see the gross liquidity in the system is 500,000 crores, 5 lakh crores, and net liquidity in the banking system is 2,50,000 crores. And he said that every bank has invested, they have not fully utilized the CRR and SLR. So part of whatever money they collected, they are all in investments. So he was saying that this money can be brought back and they can be utilized for credit growth. So overall, if you ask me, net, one, even before RBI, I would say that the Indian economic management has gone up by leaps and bounds in the last 2 years. That has helped managing the economy well. And it was very well supported by RBI action, where whenever it is required, they intervened in the forex markets, ensured that there is a steady depreciation of rupee, and people need not panic. And and their communication is very clear on what they will do and how they will do. So that gives a lot of certainty to the corporates and operators, and which is a very good sign that it is our it's being very well managed money. So these are all what I wanted to say, and if there are any questions from any of the participants, I would be very happy to answer.
Thank you, Mr. Kannan. I think it was a very well summarized and very thought through kind of a discussion. I had just one or two, um, point of views, and then obviously we can open the house for a wider discussion. Now, we always hear, the US and maybe other developed countries getting into a recession, right? Uh, in today's economic time as well, we saw that there is expectation that the common man will have to bear some amount of this burden in Indian context as well, right? So one side there is a bit of a gloom from a individual perspective or from a corporate growth perspective, but on the other side you hear very promising news which you would not have seen, in some decades, or in in some cases it's a lifetime news. For example, India being the India surpassing UK, right? So how do you see the balance? Where do you see the balance is? Is it that the gloom will prevail, or India being its very emerging country, both in terms of financial might as well as its very close relationship with the developed countries, will be able to sustain this kind of a policy dynamics and then prove that, yeah, India has arrived? What would be your take on that?
Yeah, yeah. So regarding this, we have already entered into a lot of agreements with countries. Generally, whenever you sign a bilateral agreement, they are more effective than a multilateral agreement. So this is between two countries. Right now, Mr. Subramanian was saying we are going to sign one with the UK also. And in terms of, you say our placement in the world, and of course, people always said that China plus one means India. But I can tell you in the last 10 years, Vietnam and Bangladesh, they have done a lot of work. So they have progressed well. But I was hearing that, for example, you take this mobile phone. So mobile phone, already we have more than 300 manufacturers. And last time, 2014, we had a policy of Make in India. But that Make in India identified for 25 sectors, that was not pursued with the full throttle, and that was not supported by financial assistance, that was not supported by government. But this time it is different. 14, 15 sectors they identified. And we are very, very clear. The vision of Prime Minister is very clear. You must already read that yesterday or day before, you are planning to export defense equipments to Azerbaijan.
Yeah, yeah,
And also we want to be a leading player in the world for sending rockets up. So we want to launch the maximum rockets possible in the world. So for each sector, I think we have articulated a vision where we want to be a leading player in the world. Yeah, you know that this chip making, last 20 years we are talking about allowing a chip making plant in India. It took 20 years to approve the chip making, but of course now we have to say it. And one more thing, thanks to the large corporates.
yeah,
Generally, economic growth doesn't come only from government. We have large corporates like Adani, Ambani, Tatas. So whichever sector they are there now, they have drawn up a plan where they are not talking about $1 billion, $2 billion. They are talking about $20 billion, $40 billion, $70 billion. So we want to manufacture, we want to be the leading place for manufacturing batteries in the world. We want to be the leading place for manufacturing solar equipment in the world. So this is all, lot of these corporates now come forward and they have set a very big vision. and they are following it with full sincerity. So we have these 15 sectors where government is giving money, and I believe that the largest Samsung uh, mobile manufacturing plant in the world, it is in India. So like that, what we are going to see, yeah. And one more thing, I tell you, 3-4 years ago, US was refusing to give us the technology relating to defense. They said they are strategic sectors, so we cannot give you the technology. But now US is willing to give, Russia is willing to give. Yeah. So, on the other side, we are also engaging with every country in the world and trying to see how we can maximize our relationship.
Right.
So we are entering into a lot of bilateral deals. So if you ask me, one is it all starts with government ability to raise funds. Then it gives confidence to them. Then of course these schemes which they are implementing, they are not just announcements. They are implementing. Yeah.
Yeah.
So these sectors they are implementing. So obviously we will see, unlike if you see Bangladesh, 85% of exports are apparels. Whereas Vietnam, they are also a leader in exporting mobile phones. So now I was reading yesterday or day before that India can become the leader in mobile manufacturing in the world. And believe me, it's not only Japanese companies which are coming to India, even leading Chinese companies, they want to come and set up manufacturing plant in India, because if you are based in China, people think that it's part of China. So they want to come. In fact, many Chinese companies apply to Indian government saying that they want to set up a big plant. So that way, if you ask, it all starts with sentiments. And of course, we know that the last, the FDI also, governor said compared to last year, it was higher. We find that FDI levels are going up every year. One more thing I tell you, the confidence of sovereign wealth funds. We have wealth funds in Norway, Abu Dhabi, etc. Singapore was the first one to come and invest in a big way. So their interest in India has increased, and countries like Saudi Arabia, Abu Dhabi, where they have a lot of money, they want to collaborate India on a long-term basis. So they have the money, we have the technology, so we can collaborate. So they can come and invest. So if you ask me, and of course India is a country where uh, I think we are neutral to everybody. If you ask me, of course, when you talk about geopolitics, there will be some issues, but if you see overall compared to Pakistan or compared to China, India dealing with other countries, we are more neutral compared to other countries in the world. That way, acceptability of India among the foreign investors, among the foreign countries will be very, very high. So if you ask me going forward, uh, India, we have a bright future. And in fact, people say it is a century of India and China. They say
Yeah.
not only India, we should not forget China. They grew 10% per annum for 25 years. Yeah.
Yeah. So I would completely take that point, Mr. Kannan, because since you talk about technology and mobile phone in particular, so today is again, one of those uh, dates where you establish your technological capabilities, right? You are launching 5G, and your point on having a broader impact not only on the technology sector but also on the overall economy. I think there is a very clear indicator that we are investing more and more in the future, right?
Yeah.
We are building for the future, right? Right. Yeah. So with this, I would like to invite any other comments, any other views. Manoj, I can see you. So if you have any thoughts, please do share. We'll be happy to discuss. You're on mute, Manoj.
Thank you, Nilanjan. One thing we saw from the policy statement yesterday, it was really pleasant to see a soft voice, no hardening tone about economy or inflation or growth. There was panic a day before. Currency markets, the rupee coming to just trying to touch 82 rupees level, and markets had collapsed globally a day before. A wonderful tone of the governor, and the MPC meeting also discussions, some of them were shared, very, very calibrated view, totally focused. They said we are focusing on domestic economy. Focus is we want growth to be there. Inflation is under control. In fact, one of the MPC members said other countries are trying to get into soft landing when India is at a takeoff stage. So this has not happened before globally. Multi-decade depression coming. The numbers are saying that 2 quarters down, and even the international conversations, Mr. Kennedy, when he interviewed Powell, really talking about what are you trying to do? You are trying to just control demand. What about supply side? What the Congress should do? Why not act and implement the budgets to total that? And then Powell was not able to answer that. You just talk about one thing and not try to achieve. And here RBI calming factor. In fact, the rupee appreciated yesterday, and the Sensex gave a 1,000 points, very clear thumbs up. Of course, we are no longer isolated from global developments, but it is nice to see everybody talking very clearly about India, and FDI in India would be touching and possibly crossing $100 billion. That would be a record this year. A few trickle of flows were starting to come back, and now the outflows is very nominal, 2 to 3,000 crores, which is being easily absorbed by DIIs and much larger base of retail investors. Now, Mr. Kannan, I would like to have your thoughts on clearly which sectors you feel you are going to benefit going forward in the current environment. This is one thing. And second thing is, my observation from the flow of events is, since other developed countries, US, Europe, they are facing lots of challenges in economy and in utilizing their productions and supply chains. This is practically the best time to focus and negotiate and get the best deals where India needs to import any goods, and we can get very, very good deals and better prices when others are under recession, and our bargaining powers also go up. And our imports are not going down, they are going up, but this is a sign of strength of the Indian economy.
If you ask which sectors look attractive, of course, as I said, defense is open now. So now defense companies are looking at exports in a big way. Then, of course, pharma, especially after the COVID, people are looking at India as a pharma capital of the world. I don't know whether companies have started looking at again manufacturing APIs in India. So pharma is other one. And if the economy is likely to improve, we are going to see a growth. Certainly, like I said, the banking will start doing well. Banking sector will start doing well. And of course, these sectors where this Atmanirbhar Bharat, where the government is putting money, these sectors certainly you are going to see a good growth. Where new companies are coming, new investments are coming, new production will happen. So we will see the growth coming from these sectors, which will support the overall economic growth. And as far as the negotiating the price, I'm sure still we are getting a discount of 30-35% from Russia. I'm not sure on the crude oil. But one issue is that it is not the availability of raw material, it is the logistics, availability of ships to transport. So that may be an issue. And of course, let us wish that this Ukraine-Russia war comes to an end. And all the European countries are depending on gas from Russia. So gas is a major input. If that is not available to these countries, obviously there is one part which will pull down the growth of these countries. So let us hope that the Russia-Ukraine war comes to an end. That is one. And second is, before COVID, a lot of hostilities between, even now there are a lot of geopolitical issues between leading countries in the world, US versus China, China versus Japan, China versus India. So if you ask me, most of these issues are not, according to me, strategic. Because China still continues to engage in a very big way in the economic, in the export and import of US. They are a very big partner for Japan in import and export. They are a very big partner for India in import and exports. So if you ask me, the consideration going forward should be economic. And I think the countries should look at geopolitical issues very seriously and see whichever is a very, very frivolous issue, which is not going to make a big benefit to a country, then they should start compromising on those issues. So I just wonder, when on the economic engagement, China is a leading partner with most of the countries in the world. Same time, there are political issues. So maybe China should look at that in a big way and see how these political issues can be sorted out. And of course, we hear that that Iran agreement, they can look at revival. If that happens, of course, oil will be available plenty. The prices will come down. So as I said, let us hope that oil price will come down to $80. But in the meanwhile, like Mr. Manoj was saying, wherever the countries have a geopolitical issue and they are not able to trade with their earlier partners, then India should try and see that whether we can extract some kind of concession on those trade. Yeah. Thank you.
Yeah, pharma, interestingly, after low returns for the last few years, is coming back into favor, as you said about becoming the capital on pharma capital. India will be a pharma capital for the whole world, and also depreciation of the Indian rupee would improve the profitability of the pharma companies significantly. And lot of quiet work is being done on R&D, lot of new products, lots of new innovation. I think the results of that are coming in. Possibly it will be quite better times for pharma, and market also gave a thumbs up. We saw some of the important companies, Sun Pharma, Cipla, and a few other leaders go up significantly in the markets yesterday. Another thing is we talked about banking. Banking is expected to do well. Credit growth is coming back into the system, and good level of credit growth. Good banks are talking about 15 to 20%. Even the average system growth now is 15% plus. So a kind of a strong revival for the banking sector, and everybody is looking at the preliminary numbers, I think, which will start coming on 3rd of October on the advance and deposit growth. And the result season is coming, for which we always do a deep dive. And one thing, interesting thing is, we have seen quarter to quarter, looking at treasury rates. Treasury rates have been causing havoc globally, particularly in the US markets, and bond prices have been collapsing, causing a lot of pain in the system. Like global, lots of bond prices have come down by 20% because of sudden and very sharp hikes in the yields. But somehow here we saw yesterday also, treasury markets in India were quite calm, and yields were also quite stable, around 7.35%. So the treasury, there was a fear of treasury losses in the banking system, but now that concern is not there. This quarter has been stable. So there should not be any adverse impact on the well-managed banks' P&L and balance sheet for the quarter, and credit growth coming in the system, and NIMs are also doing well for most banks, credit quality under control. So the sector should also benefit. Technology will get benefit of the forex rates. I would like to know from you, Mr. Kannan, specifically, what is your view of the forex scenario, of forex reserves as far as forex rates?
Yeah.
Because this has been a lot of very dynamic area,
Yeah.
and lots of developments in the last few weeks on this.
Yeah. So like the governor said, we had more than $600 billion of reserves. So if you look at the decrease in reserves, we attribute 61% of decrease in value due to decrease in valuation. That is rupee versus dollar. So that is what you are saying. And if you ask $531 billion, I don't know, maybe in the world, only 5 or 6 countries have a reserve of more than $500 billion. Maybe Japan, maybe Germany, China. I don't know. I don't know which other countries. So only 5 or 6 countries in the world, they have reserves of more than $500 billion. But at the same time, we can't just look at the reserves alone. There is something called external liabilities. So external liabilities includes liabilities of the government, which they have contracted loans from World Bank, Asian Development Bank, etc., etc. Then there are external commercial borrowings from companies. Then there are negative balances of banks in forex. So if you look at that number, that number is always, of course, when our reserves went above $600 billion, that number, I think it was almost equal. But now, if you look at that number, liabilities, they are higher than our forex reserves. So if you want to calculate net forex reserve, actually it is negative for India, because we have so much of forex liabilities. But if you just look at the nominal value, $540 billion, this is a very good number, and this can cover imports of more than a year. Yeah, this can cover, of course, we have repayment obligations. So this can cover repayment obligations. Unlike in the year 1991, we had only $1 billion reserve. Today, we are sitting on $530 billion. which is more than a year of, and also governor mentioned something. When you look at a macro economy, you look at, in fact, if you look at India's debt to GDP, he says among all the emerging economies, our ratio is the lowest. So you look at debt to GDP ratio, then you look at debt service coverage ratio, like your debt service coverage ratio for companies, something like that. You have debt service coverage ratio. So there are ratios which tells you about the economic stability of the country from a forex perspective. So he said that all these ratios we look at, they are all at a good level and they are all favorable. So if you ask me about forex position, like I said, of course, one worrying situation is that our imports are growing much faster than exports. So they are depleting the forex reserves also. So we have to make sure. I don't know, a few years back, government identified few goods which are not really productive for Indian economy, like gold, and they said restriction. They put restriction on how much gold you can import. So something similar, if our imports are likely to rise faster than exports, something similar measure, I think RBI should consider. That is one way, instead of all the time intervening, because if, uh, of course, Mr. Subramanian was very gung-ho about service exports this year. He said this year, actually, we ended up with very high service exports compared to the budget. And next year, he was even more bullish. So the service exports comes handy, including remittances by Indians and all. One good thing is that still Indians remit the maximum money to their domestic country. Even last year, they remitted $82 billion. And China used to be much closer, but I don't think last year China had 70 or $60 billion only. So that is a very good flow for us. So that comes handy. And of course, services, like you said, IT sector, the digitization is a mantra today across the world. So every company, whether it is small, medium, or large, they want to digitize their operations. Fortunately, we have 5, 6 large companies which have a specific vertical on digitization, which they can capitalize, and that is going to boost our IT exports. Yeah, this is what I wanted to share. Yeah.
Thanks. Harish Madaan is here with us. Rich experience in treasury and forex, and excellent experience with Industrial and Commercial Bank of China. Harish, you would like to say something?
Yeah, thank you, Manoj, for this interview. Always so kind for introduction. But just first is good morning to Mr. Kannan. It's a really pleasure listening his views. And in fact, I'm interacting with Mr. Kannan after a long time. Mr. Kannan, I just want to understand from you the perspective where we are saying that yes, India has a sufficient foreign exchange reserve. I believe yes, but whether it is going to be there, I am not sure, to be honest. So that is why. So one aspect you said, India has a good foreign exchange coverage ratio, and depletion of foreign exchange reserve is only because the recent report which came, currency devaluation. But since we are seeing the export, especially to Europe and US, where we are talking about the recession, and India is like having a major chunk of these are the export destinations. So don't you feel that, because right now these ratios look very good, but prospectively it may be difficult and we will find the headwind RBI governor, and what are the rate hikes which is happening across, I think that is more to currency protection rather than inflation worries. Just want to have your perspective on that, sir.
Yeah, that risk is always there. Like you said, IT, if you see 65% of our exports, USA 22%, Europe remaining to rest of the world.
Right,
So when these companies they stop doing well, then there is a chance that these exports could get affected. That's one. Second is pharma. We know that after the COVID, what has happened? We are saying that we are the one company which was manufacturing these medicines, but
right,
now there is a movement in every country in the world, especially in Europe.
yes,
They all want to manufacture API. Yeah,
right, right,
they want to manufacture API, and the US they want to be self-sufficient in manufacturing.
right,
So even before this COVID, there was a movement towards de-globalization,
right, sir.
where everybody wants to manufacture their own and start doing it.
Right,
But only issue is that the cost.
absolutely.
The cost of doing, if you do it from India, it is one third, one half.
Yes,
So that is advantage. But like you said, in the next 1 or 2 years, there is a high risk that our export markets could get affected,
right,
and some of our exports could be affected.
right, sir.
That is possible. Yeah,
Right,
that is not. But agriculture, we send $40 billion.
right,
So agriculture is bound to be there.
right,
That's
sir.
one. IT, mostly our agreements are with large companies,
Right,
so they are likely to continue.
right,
Pharma, I don't know. Pharma, even though there is a domestic movement, they might collaborate with Indian companies.
right,
So pharma might pick off. Then, like I said, now all these companies are coming to India.
yes,
They are willing to transfer technology
right,
from Europe, from Hungary, from Poland. So these defense companies, they say, we will transfer technology to you, so you can manufacture and you can export from here.
right,
So they can stop manufacturing there. They can ask India to manufacture and import also.
right,
So both possibilities are there, but I will not discount the risk which you discussed. Yeah,
yeah, because
that risk is there.
right. And also, what I believe, sir, there is these what you said. Yes, these are positive, but these are little medium to longer term positives, which you're seeing like a supply chain movement or the transfer alternative to China. Though we are talking about alternative to China, but I don't think so. As of now, we have been equipped to deal with that. The companies they want to, but we are not able to absorb the kind of regulations or bureaucracy that is there. So these are there, but these are little, I find, the medium to longer term positive. But in the near term, because our economy is, we are saying, is reviving. So when revival is happening, a lot of consumption is happening around. But that consumption, if you break up this the GDP, also the import data. So what is happening is that consumption is coming from the a middle income class, and that is on the discretionary products. And discretionary products again we are going to import. So what is happening? Our GDP at the lower pyramid is not picking up, which is like a we have seen a lot of reports also with the PMI also, which is putting up like a we have seen a stress in the rural side. So that side of GDP is still like facing little challenges. That is what reflecting in governor's address also, because we are talking about takeoff, not about the hard landing. But on the other hand, the imports are growing because our middle income is somewhere is booming and they are consuming a lot because they have a saving in their hands. So now this is again the contrary for this entire this thing, because you are importing more. We do not have any manufacturing, either mobile phone. What we are talking about is assembling, not a manufacturing. So assembled happen, we add little value added and put like a make in India tab, but effectively everything is imported. So this is booming. So your import is growing, your export flow slowing of export, the risk is very high. Top of that, because interest rates are increasing, as Manoj has also mentioned, and you have also described it, where the global economies are taking this, our interest rates are increasing. So rupee, there's a very way RBI intervening as long as it can contain the volatility. But on the contrary, despite falling the commodity prices, your inflation is going to stay and interest rates are increasing, so currency volatility would increase further, where aggressive RBI intervention would further dip the reserve. So if what is in the market also where you're talking, once we see the $500 billion, we'll see panic, and then we'll see again a bout of high volatility. So just want to have your perspective on these matters.
Yeah. See, like you said, our Forex will get reduced every month.
Yeah.
The fact is that our imports are higher than exports.
Right.
So they'll get reduced. There is no question. On this alternative to China, like you said, short term, we are not going to fill the gap. It will take at least 3 years to fill the gap. Like you said, most of that is assembly. But that is what I said. You look at countries like Vietnam and Bangladesh, they took 9 years to build. You have to build an ecosystem.
Right.
You have to build an ecosystem to develop an industry. So it is not just assembling. So now we are talking about manufacturing parts also.
Right.
So that will come. That ecosystem is going to come. But it will take 2-3 years. And like I said, all the time RBI will not be able to intervene in the forex market.
Right.
And they cannot also. So that is where we have to start looking at imports item by item in a very minute way and see which are really adding to productivity. Like gold is not going to add. Gold is, like you said, all over the world what has happened, I can tell you, after the COVID, the rich became richer and middle income people also continue to do well. So the demand from these two segments, they continue to be robust. Even in India, people say that the number of SUVs sold as a percentage of car sales is crossed 40%. SUV means minimum 12 lakhs. Yeah. So what we are seeing is that actually the high price products, they saw a good demand.
Right.
That's one of the reasons why you're also saying that there are imports. So that is what government has to now start looking at imports seriously. Because yesterday they said that they don't want to restrict. I don't agree with that. So they have to start looking at it and say which is going to be intermediate product, raw material, you allow.
Yes.
Which is going to be non-value added, which we are going to consume as an individual. So as a 1 year or 2 year, you give a restriction, no?
Right.
Every occasion RBI cannot interfere.
Right.
There are limitations. And the fact that it has come down from 630 billion to 530 billion shows that we are losing. Yeah. So it will happen.
Right.
And there is always a high risk that our export markets, they might see fall in demand. If they see fall in demand, then we will see fall in demand.
Right.
So that is a virtuous cycle
Right.
likely to happen. That risk is not gone away. It is still there. So that is where today people talk about contingency management. Contingency management is you don't plan for 3 months, 6 months, 1 year. Just see every day, see what is happening and decide what is to be done next day. So that is what government has to do. Every day they have to review global developments and see what is to be done next day. It is not just one policy statement. We do that.
Right. Right.
It has to be a continuous monitoring, and they have to tweak policy. They have to tweak policy at regular intervals, not wait for the date for the policy.
No, I completely agree with you, sir. Completely agree with you. I think a lot of things to talk and discuss, but I think there is other thing also needs to be carried. Manoj has a schedule, so I will just stop it. But I will connect with you separately. Really pleasure listening your views.
Yeah, thanks for your perspectives. They are very valuable. Yeah.
Thank you, sir.
Harish, would
Yes,
like
sir.
to know from you, when we met last month, we
Yeah.
talked about the trend and foreign exchange rates, rupee
Right.
dollar. And
Right,
at
sir.
that time, we were below 80. And you
Yeah.
mentioned 81, 82, that
Yes, sir.
range, it should come a few months ahead. But you among the very few, you said it
Predicted.
will come, and it has come, maybe much faster. Maybe looking at the US development, what you see the trend, yesterday rupee has appreciated. Would it stabilize in the current range, or would it appreciate, looking at India is now in the sweet spot and a very well excellent management of forex situation, and also now rupee is becoming a currency. Many countries and economy want to deal in rupee as per the new developments driven by global imperatives, and also the RBI supporting this thing, and for rupee to become a global currency.
Manoj, I just put across. I think the two things that one thing we discussed about the rupee movement, and the second was which you covered at the last is rupee as an international currency, which I covered as an INR international trade settlement. So this is after I think our presentation, it's become more prominent and every day it's coming in paper also. So I'll just cover the second part first and then move to the first part. Uh, this INR international trade is again is a compulsion and also looking as an alternative to dollar, because at this point of time, India is not India but across the globe. There is a feeling with a low trust in the US dollar after this Russian embargo or Russian thing what has happened. So this will continue, but this is a slow game and it will take longer, because at the end of the day, where it is gonna happen is uh, Swift is something which is having controlling the entire transaction network. That is something will go away, which has to go little later, but then this supremacy will reduce faster, and especially the countries will go for the another new mechanism, which is the digital currencies, where they will try to do central bank settlement with the control with the central bank rather than a SWIFT, which is happening right now. So those kind of development are very much happening across the globe, and in fact these things have faster put everything on a fast track, which was slowing, but now it's become very fast and very prominent, and which we have seen like India, Italy is coming, Cuba is coming and want to do that. Not only Russia, even to be honest with you, on the track I have. I mean, I'm working with some of those also. Okay, these things. So the many things are happening around. Not only Russia, I'm saying Sri Lanka, Afghanistan, Bangladesh. So many things are there. So that is on this part. This is an alternative which across the globe is been explored, not only India. So and this is again the norm forward. Now coming to the first aspect of currency movement. Now currency bound is very real. So what you said in the pre-interview when you were covering, you were saying that interest rates are there's across the treasuries are rising. So when treasuries are rising, because US is raising interest rate, with that the dollar index is strengthened to 114. So 114 level, which we have seen a very long back, or now we are very in the time of earlier cycles. So if it has reached to that level. What we have seen is with the strength of this dollar index and still US is still on the rate hike scenario. So what we have seen is Indian currency is continue to be under pressure, because the FPIs where they will move, and the real interest rate differential between India and US is narrowing. So with that, they would be preferred to move this capital from India to other countries. That is why, to the developed countries with dollar. So that is why we've seen dollar is strengthening, gold is going down, silver is down, commodities are down. and emerging countries are using, even China, India, all these countries across. In fact, the developed country, Europe is also worse affected. Where Europe, UK, their countries are also worstly affecting with this. So until the dollar, we have not seen that uh, the US interest rate hike is stopping or they're coming out. This is the end, because earlier market was pricing 3.5% terminal rate. Now they are pricing 4.5% terminal rate. So with this, the dollar strength is happening. Till that, we have seen continuous bouts of volatility and also weakness. Once this would come now, this I'm expecting this will come in another 1 or 2 months, because market is forward looking. So once they feel now this is enough, now the recession fears are real, so they would stop it over there, and inflation is anyway would come down, because dollar strength is a counter to inflation, global inflation, and the commodity prices will come down with that. So till next 2 or 3 months would be challenged. But after that, I think everything would be pricing, and that is where the dollar rupee will stabilize. Earlier, I was expecting the dollar rupee would stabilize around 80 half level, 81, 80 to 81. But I believe with this, 81 to 82 levels is somewhere which will stabilize. It may go up, but again, retrace back. So that is what my feeling is. By December, you would see 81 to 82 ke beech mein, this is one where it will stabilize. But during between, there would be a lot of volatility. That is my perspective on dollar.
Thanks, Harish. In fact, I've been requested to also announce, besides our weekly digital meetings, physical meetings, chapter meetings, and roundtables at in person have started. And next Saturday, we have a in-person meet at BKC. And Harish Madaan has been kind enough. He'll be sharing his thoughts on the latest developments on lots of things like digital assets, and we have corporate strategy. There are lots of things going on, and many of our topmost uh, people connected with corporate industry and markets are participating at uh, very low contributory cost for knowledge and experience sharing, and learning from each other, and developing high level of expertise based on very sound knowledge and experience and deep dives like today we are doing. And we are going to look at many things, corporate strategy, latest developments, forex markets. Now today also another thing, in fact, we would look at, in fact, I would like to have views of both Mr. Kannan and Harish. Outbound investments RBI has been looking at and making things much simpler, and new frameworks are being developed. So has the time come for India and Indian business houses to invest in a big way, invest abroad globally, acquire companies, M&A, lots of big bargains, deals are available, and also maybe investments in India directly through international financial centers and tax havens, and through the ODI route. And Nilanjal has done a deep study. He would be sharing the latest developments on the ODI Forex front and your views. It's a very connected topic. That's what we said. We will do the whole framework. Would be very interesting. And also interesting thing which came in last week in limelight with our global Indian Adani coming in the top 3 richest people in the world, and the position of top 2 and 3 is fluctuating now. But two of Indians in the top 10 list, big money available also. So could be a good opportunity, and there are hundreds of Indian entrepreneurs, Mahindras and many more. It is could take India totally in a different league. We even talked about exports and all. Nilanjan, some thoughts from you?
So Manoj, I think the if I talk about the regulatory framework, I think as Mr. Kannan also mentioned that we are looking for our future, right? We are building for the future. So whatever I'm going to talk to all of you through my slides or whatever is reflective of that mindset, right? So you also talked about uh, Indians making mergers and acquisition overseas, right? So we have enabling provisions under the Companies Act where an Indian entity can go and buy a particular entity outside, right? We also have provisions, though they have not been operative, of Indian companies getting directly listed on overseas browsers, right? So I think it is, as Mr. Kanana also mentioned, that it would be a century that is that will be worth keeping a tab. Uh, but on the ODI side, I think the intent of the RBI and the ministry is to focus very much on reducing litigations. Yeah, to give clarity on certain very basic or fundamental concepts, right? If you would recall the litigation which is pending across courts in India, the government is is one way or the other linked as a defendant or as a opponent. So I think with that, I would like to start off. But I think to answer your question, they have walked their talk. They have done quite a bit of changes in the ODI norms. Earlier, if all of us would recall, there is to be only one kind of a overarching set of guidelines. Now we have four separate documents, right, which in very detailed highlight the need of the hour, the intent of the government, clarifying basic things, easing various matters, or accepting which have been done as a matter of practice for so many years. Yeah. So with this, let me share my screen. Yeah. I hope the screen is visible. Yep. So this happened somewhere in August 2022 when the RBI came with four separate, very detailed and comprehensive regulations relating to overseas direct investment. As Manoj also mentioned, we are going to talk about investments by an Indian party to outside India. So earlier we had only one or two set of directions. We had the transfer of foreign securities regulations and acquisition of immovable property outside India. Now we have overseas investment directions, we have overseas investment regulations, we have a master direction, and there is another guideline. So all these put together now frame the overseas investments guidelines in India. The idea, as I mentioned, was to enhance transparency, to bring ease of doing business, and bring more clarity on certain aspects. Now, let's say what are those top changes that we should be thinking about? So there had also always been instances where uh, the money has gone out of India. It was invested in an entity outside India, and the money again came back to India through one or more subsidiaries in between. So typically, this is called a round tripping transaction, where the money flows from India and come back to India. So this had always been a matter of debate, especially when the money is routed through tax havens, whether it is permitted, not permitted. Um, so the courts were also seized of this matter. But what the new regulation permits is that round tripping is permitted through two layers of subsidiaries without RBI approval. So what I would like to note is that if you are having a round tripping transaction where you are investing out of India in a subsidiary, and the subsidiary would again send that money back to India, through another legal entity, you don't need to have a RBI approval, right? It can come into India through this entire route without a particular hindrance. Now, we always talk about how do you identify a particular entity, whether it's a subsidiary, whether it's a JV, whether it is an associate. So there was a lack of clarity, and more and more, if you would see the move by various regulator is to talk about control, right? So as far as control is concerned, again, there was no particular definition or particular guideline. They have always been subject to a legal or a judicial interpretation. Now there is a particular definition which is there under the ODI framework. If you would see further to my slide, the normally accepted definition of having a majority of board of directors still finds a place, but the definition is much more wider. It would it would talk about uh, control of management or policy decision. Uh, it will it will talk about shareholding pattern, shareholding agreement, and also voting rights. So sometime I this kind of a definition make me wonder that for a particular entity there is so many regulatory overlap. Let's see, if I talk about a listed entity and somebody asks me who is your subsidiary and how many subsidiaries do you have, depending on the person who is asking that question, the my answer would change. Let's say somebody from SEBI is asking. There is a particular definition under the SEBI, right? Somebody from an accountant, or an auditor is asking. You will have a separate definition of subsidiary. Under the Companies Act, there is a separate definition. Similarly, we have now a definition under the RBI norms. So you can see a multiplicity of definitions. Obviously, there would be some kind of overlap, but all the regulators are trying to focus more and more on the concept of control. It is not just holding more than 50%, but they are going beyond that. They're talking about management decisions, the ability to the ability to exert that power on the entity through its representatives is the central area of focus now. Another important change which the RBI has brought in, that let's say if you have an account which is classified as a non-performing asset, or is a willful defaulter, or is under investigation, let's say by SFIO or by CBI for any financial reporting matter, then you cannot remit money outside India without obtaining a no objection certificate from these investigative agencies, right? So it's a completely clearly written. So there could be ongoing probe by SFIO, let's say, where or RBI for that matter, on a particular entity. So unless you obtain a no objection certificate, you cannot remit money. Uh, sure. A couple of cases where they have been eased is uh, is let's say the financial remittance towards loan to a foreign entity in respect of bank guarantees can only be made after ensuring that the Indian entity has made ODI and is control of the foreign entity. So I would have to very categorically find out which all entities I do control. First of all, I would also need to establish that the interest rate that is being charged is on an arm's length basis. One important point which I would like all of you to note, that the way the regulator is emphasizing on the concept of control, they are moving beyond the legal entity concept. They are now looking at certain matters at a group level. So, for example, if there are outstanding guarantees, which is given by an Indian entity, when you look at the ODI norm compliance, in certain cases, the RBI has also talked about looking at from a group scenario, right? So that's the reason the concept of control is gaining much more importance. and this is now becoming a central point to look at transaction or the entire arrangement at a holistic level, at a group level, and not a legal individual or a legal entity um, level. There had also been cases where if the entity is, let's say, incurring losses, can they still remit money outside India? Now it is clarified that if you are making losses for the last 2 years, it is now permitted to restructure your balance sheet, and most importantly, you don't need to obtain any RBI approval. Again, a bit of relaxation. If you're opting for a deferred payment option, especially um, is- um, if you are acquiring and transferring foreign securities, the purchase consideration can now be deferred, and again, from ease of business perspective, they can be done without seeking RBI approval. Now, let's say, what about us from an individual? An individual is now permitted to gift foreign securities to its relative outside India without any RBI approval. Similarly, they can also receive foreign securities by way of a gift from a person outside India, subject to the FCRA compliance. Uh, so now let's talk about a repatriation of dues. Now they had also always been questioned that if I have recoverable, from a particular transaction, and if I want to do a write-off, right? Are there any particular compliances, and some clarity would have been required. So here RBI has said that any person in India who is holding equity capital may transfer such investment involving being write-off under the automatic route subject to certain conditions. So earlier there were no conditions. Now they have made a specific clarification on that matter. They have further clarified uh, where the transferor is required to repatriate all dues before disinvestment. Such requirement shall not apply, and the due that does not arise on account of investments or debt like export receivables. So they have kind of a liberalized making such investments, and they have also given some kind of a safeguard. One of the very important prohibited businesses they have said is that you cannot make investment in gambling. This I think is a carry forward what was there in the previous regime also, but they have specifically been called out in the regulation as far as the gambling business is concerned. Uh, Operational challenges, I would say from an auditor's perspective, there is a significant amount of reporting requirement. So as you all would appreciate that whenever an foreign direct investment is made, earlier the auditor is required to make certain assessment and assertions in the certificate given to the authorized dealer. Unless that certificate is given, it cannot the AD banker cannot remit that money. So even in the current framework, such requirement has been carried forward, and I would show you in this next slide how onerous those auditors reporting requirements are. But again, maybe the RBI or the AD banker would like to have a perspective from independent third party. That's the reason you would see increase in the reporting responsibilities of the auditor. Another very significant change is that, let's say there is a delay or in filing certain documents with RBI. It has been very categorically stated that unless those delay in reporting related to compliance have been regularized, a person cannot make further financial shell commitment. This had also been a matter of a discussion under the Companies Act, where the entire shell company aspect were looked at by the MCA. MCA had suo moto debarred directors of those companies, and also initiated procedures against them. So and primarily those happen because of lack of timely filings of financial statements and annual returns. Similarly, the RBI is also following suit. They are saying that unless you file those documents and you pay a late submission fee, if you're planning to invest money outside India, you will not be permitted to do that. Yep. Let's see from an auditor's reporting side. If you see that now there are seven reporting items, which is there um on the screen. Uh, Most importantly, what I would like you all of you to note is that I have to make a overall assessment first of all, that whenever this investment is being made, all the rules and requirements of the FEMA framework has been complied with. So even though I am certifying particularly these seven items, these are only illustrative. These are only these seven items which have been highlighted in particular. But from an overall perspective, the expectation from the auditor is that they certify or they look at compliance with all applicable FEMA norms, and in particular, they talk about these seven items. We also discussed about NOC. So you would find a specific reporting responsibility where the auditor is supposed to state in case of financial irregularities which is being investigated by a financial services regulator, whether the entity has obtained the NOC. Uh, whether the entity has complied with the valuation norms, that is also a specific requirement which the auditor is supposed to certify. I would like to draw all of your attention to the last point, which is talking about the entity as well as the group. So when we talk about guarantees being given outside India, then there is a specific requirement to look at whether those conditions are met not only by the legal entity but by the entire group. This, I'm sure, will be quite challenging for an auditor because the auditor may not have access to the books of accounts of all the group companies. And mind you, when I talk about group companies, that doesn't mean which are my downstream entities. It could even be entities above me, or it could be even be entities which are parallel. For example, a fellow subsidiary. The auditor of a particular entity will not have access to the books of accounts of such fellow subsidiaries. So again, we would expect some kind of a clarity from the RBI on this matter to deal with these challenges. So my suggestion would be to consult within the FEMA experts, have a very detailed understanding of these requirements, because as I was told, RBI is also trying to suggest additional uh, clarifications. They're also seized of these requirements, so you might expect some kind of additional guidance as well. But in a nutshell, if I have to wrap up, these reporting responsibilities are quite onerous, and they would again uh, test the limits of an audit which we perceive in a normal sense. So, with this, I would like to open the house for discussion. If there is anything in particular somebody would like to discuss or share, happy to have their views.
Mr. Nilanjan, it's good that all these provisions are brought.
Yeah,
But last time, after 2008 crisis,
yeah,
many of the large companies in Europe and US were available for takeover.
yeah,
So when Indian companies tried taking over, the concerned local governments, they were not supporting the move.
sure.
So so something similar happens. When ArcelorMittal also,
Yeah,
when you want to take over Chorus, all these issues were faced.
sure.
So what companies can do to overcome such hurdles?
I think Mr. Kannan, first of all, you also mentioned about a particular deal, right? So I think it is very important that it is not a transactional impression which an entity should leave, right? I think you mentioned about having a very positive attitude or India being neutral
Yeah,
towards a particular uh,
yeah.
item, right? So I always felt that when you talk about a transaction or a relationship between two countries, right, it is the country which has to come first, right?
Mm.
So I can't be subjected to my own personal gains, right? So I think that should be a starting point, that I establish that yes, exactly, that's what I want to do, which is not only for me be benefiting as a promoter, but how the entire stakeholders, right?
Mm.
When you talk about chorus being acquired, so what I felt when I was pretty young when that deal happened, what I could read from the media news at that particular time is that one of the reason why Tatas were favored, right, was of their entire attitude of being fair,
Mm.
not only towards them, but for the employees in particular, right?
Mm.
You would see all these news of Ratan Tata
Yeah.
standing up in front of the trade unions and making assurances, right?
Yeah.
And they were not just empty promises. They were actually, he meant those what he said. So I think if you are trying to involve or get into a transaction of that a large scale, first some kind of a very good, I don't want to use the word brand building, but a very close relationship has to be developed with that particular seller, right? Because ultimately he's gonna give up something that you want, right? Second, I would suggest a very detailed assessment of how the legal requirements is. Not only from a form. See, there are only 7 items which you see on the screen. But what are the substance of those requirements?
Mm. Mm.
Are we meeting those norm in substance?
Mm.
Right. Again, third and most importantly, I would say is a reach out exercise. How are you able to reach out to the entire public? Right. Because there are many cases where even in India, shareholder activism is gaining a much more wider importance. I have never heard where the MDs or the promoters or CEOs appointment or reappointment getting struck down. But nowadays that is also a reality, right? So again, from a reach out perspective, from a compliance or with the laws and regulation in substance, and most importantly, looking at how are you going to add value to that particular economy. I think that would be a very broad kind of a direction which I would like, somebody to consider when you are trying to get into a foreign jurisdiction.
Thank you.
Yeah. Manoj, you have any thoughts on these?
Yeah,
Sure, you have
Nilanjan,
some.
so this is a kind of a good step for ease of doing business.
Yeah.
And in fact, market is talking about rupee becoming a almost convertible currency soon with the kind of uh, new developments in the last few months.
Sure.
So hopefully, we'll take advantage of this, and we have come a long way. And India could be a large global investor in other countries and form much stronger linkages with many of the countries. With its high technology, we have developed and providing, and also fifth largest economy we discussed in the beginning, uh, and also fifth largest market capitalization. So it's a sign of new things to come.
Sure, Manoj. I think you have rightly put it. It is primarily focused on ease of doing business, rationalizing procedures, and giving better clarity on something which have been going on for so many years, but it lacked regulatory acceptance. So I'll just reiterate, and I will invite any thoughts from anyone, any perspective and experiences.
Pankaj, you have been a banker and you have been looking at a lot of developments. Your thoughts on foreign investments, both inwards and outwards, and ease of doing business. What's happening?
So this is a generally and largely driven by the policy changes and policy makers. Since the induction of Modi government, and we had seen the paradigm shift towards the ease of doing businesses, whether it is for a foreigner or for the Indian. So I think it is now almost 7 or 8 years, and the policy is in place. A lot of refinement is getting done after the practical difficulties and everything is happening. Plus, I will quote one thing: the new geopolitical equation has made India in the sweet spot. So let us consider there are some lacunas in the regulation or rules and laws, but still it is far better than the China. And the trust factor with India for the world community is at its peak. So we are going to see the huge inflow of FDI, FII once this war-like situation and things will settle down. We will see. And one thing very interesting to see that how many country who are the next exporter to the capital to the world will remain exporter to the capital to the world. Europe is in the bad shape. So how much they are going to export capital to the world? That is a key question to me. So let us see, wait and watch, and definitely India is in sweet spot, and it is going to be much better here on. That is my broad thought.
Thanks. Excellent interactive discussions. Any other thought? We have many experts here, many other foreign bankers also. Lots of people taking interest in the markets. Any other thought before we move on to the next topic? Yeah, so great insights, deep dive into global developments, RBI moves, and also foreign investments, FDI, and also ease of doing business, foreign investments abroad, ODI. Pankaj has been sharing hidden gems. In fact, Pankaj said we should start a hidden gems series. There are lots of listed companies and with great fundamentals. And Pankaj, you have been doing deep dive into such companies, looking at their presentations, their annual reports, their balance sheets, and also interacting with them. And we have seen you have been asking them, encouraging them, and also asking them tough questions. So investor benefit and they also benefit. Yeah. So look forward for you sharing some thought on the developments in the last few weeks and this week especially.
So taking forward to the last webinar we had done, just a minute. Last webinar we had talked about this Apollo Sindoori, which was totally came out of blue to my mind, and just I went through the development and connecting the dots. I got the feel that the company is going to acquire something which will make this company very different from what is since last 6-7 years. Since I am tracking this company since long back. So in the AGM, and if we will go through their presentation, we will come to know that this year their pipeline is to add almost 14 new clients, like 2 MIT University campus, 1 lovely professional university, and OP Jindal, 10,000 person eating every day. So these are the big accounts they are getting. Even in Chennai, Tamil Nadu, they have got something big. So once this presentation is on the company's website as well as on the NSE, if you go through fourth or slide number 5, Manoji, you can just explore. So it is there. So you can read out the all 14 names. These are fabulous. Plus, my assessment was there that they will do some acquisition. But in during the AGM, I came to know that they are going to acquire their own uh, associate company, that is Favor Sindoori Management Services Limited. They are into the, actually Apollo Sindoori is holding 49% and 51% is being held by the promoters in the individual name. So they are the top line of that company is, the last year was 211 crore and PAT is something like 22 crore or something they had mentioned. So that company is getting merged, getting bought by the Apollo Surgery at the price of cash consideration of 70 crore. For that, they are taking a credit line of 35 crore they are going to utilize for that, and 35 crore from the internal accrual. And what they mentioned that by 31st March 23, it will, entire debt will be paid off by the cash generation. So we can now make out how strong the cash flow is for that company. So FY24, if we look at based on their interaction, probably I will share the AGM recording with you also. It is there. So FY24, it looks like that if 400 or 450 crore top line well on the card, and around 7% PAT margin we can easily assume. So 30 crore PAT, market cap is just 300 crore. Still, it has gone up around 40%. Still, the market cap is nothing. It is just 300 crore. And again, I am reiterating the pedigree like Apollo Hospital Group motor. This will command the premium. So very exciting time I see in this company. So this is a follow on which I had mentioned in the last webinar that whatever is take out of the AGM, I will share with you. So it looks good, and I want to mention here that my vested interest is there. I am biased with my view because I have invested in this. So without bias view, you can't invest in anything. So that is also the key. So
It's a very
that is
interesting.
the follow-up.
Yeah, to notice there has been a time when most of the companies, they used to have planted speakers to appreciate without a basis what management is doing in spite of bad corporate governance practices, and also some shairis, including in large companies. And it is good to see here company is encouraging senior professionals like you to ask questions, and not only that, they have been answering questions and also happy about it. And from what you shared is you are among the prominent speakers in the meeting and had gone through a very scientific process. You had emailed them the list of questions. A very good thing.
Yes.
It gave them time to prepare, and also spoke at a meeting as one of the important speakers. In fact, it came out the main speaker, and were able to get a lot of information from the company management, and the company management is also proactive and appreciated the good work you have done. And also significantly, it was observed hidden gems, good companies or undervalued companies, and you have been sharing the process. Volumes also go up when investors come to know about such companies, and when the market capitalization, market cap discovery is also taking place, and this is a win-win situation for both the investors and the management. And the company also promised to
Manoj,
share more information and has not hidden any information. In fact, they had shared all the their response to all the questions and developments and on the investment and business model.
So, Manoj, one thing is very clear that this Apollo Hospitals market cap is over 60,000 crore, and this company is just 200 or 300 crore. It is not digestible. Either they will merge it with the Apollo Hospital itself. Why to keep it listed? So there must be some big plan in their mind, because this food and beverage business to the hospital, they are not only going to cater the Apollo group. So in last, I think webinar, I had told that they have less than 10 hospitals, but actually they are 58 Apollo hospital they are working, and 80% of the business is coming. But now they are spreading their wing to the other uh, in big university campuses, other hospitals, then other big establishment, big corporate. So if you will go in deep, if you will try to analyze some mega factory, if you will see that the catering services are very, very poor. And post COVID, a lot of change is happening. People are very conscious about this health and hygiene, right? So I see a paradigm shift in the good SOP with the hygiene food is going to take place in next 4 or 5 years, and it is going to be a big play. Very few players in this segment are available. So in my view, this company has a great potential. I will not put any number, but definitely in my mind, the number is very, very large. And that's how I work. So I generally don't look at the balance sheet at the first. I look at the business potential and the kind of the promoter and who is there, their enterprising skill and all. And that is working very well, because balance sheet is a reflection of what is happened in last 4 or 5 years that comes out of after the 4 or 5 years in the balance sheet. So till such time we already lose a lot of steam. Of course, the risk is also there, but the reward is also in that proportion is very, very large.
So that's interesting, and it is good to see with your efforts and such companies share more and more information with all the investors, and also answer the questions at the AGM, and also put up more information on their websites. And so more information, meaningful information is available to all, and this always helps in proper price discovery. And any other thoughts from anybody else? Any comments, any views on this company or the company?
Any question regarding this company? It is with me, with my limited knowledge or understanding. I will definitely try to clarify, because sharing wisdom is the best thing in the world.
Yes. Knowledge shared is knowledge gained, and here we are sharing experiences also.
I will also get corrected now if I am wrong somewhere.
Vinod, would you like to speak and share some thoughts?
Your mic is mute, Vinod ji.
I like the discussions that happen weekly, so I normally pay attention to what y'all say. Hello? Hello?
We can hear you, Mr. Vinod. We can hear you.
I've been listening to y'all regularly, and I find it quite enriching in terms of knowledge. So.
Sorry, I missed it because some call has come. That's why I could not hear. Pardon me. Can you repeat it again? If it is related
I find the
me?
discussions quite enriching. That's the reason I listen to it on a weekly basis.
Thank you very much. Your encouragement really, is a good thing for all the participants who really worked hard and do deep dive into things, and always ready to share knowledge and experience with presentation.
I will contribute more in the coming month, mid-November onwards.
Sure. Always welcome, and you are always welcome to even share your thoughts do presentations on topics of interest along with the team. It's a great work. And so lots of sessions ahead, including the in-person meetings which people have requested. They have going on getting very good response. Roundtables with lunch at the BKC and possibly in other places, depends on the participants and the subscribers, and lots of sessions ahead. As we said, Hidden Gems series, also the good, bad and the ugly, with deep dive into the sectors, competition,
Manoj bhai, your
investment
voice has
models,
gone.
business models.
Please unmute. Manoj bhai, your voice has gone.
Yeah, as we said, lots of as suggested by members, Hidden Gems series, business models, investment models, wealth creation process, also the good, bad and ugly. So many companies, results would be coming also. So deep insights, good, bad and ugly, as shared by the participants. So thank you, everybody. Prakash, would
Thank
you
you.
like to say some thoughts?
Thank you.
Yeah.
Thank you,
Prakash,
Manoj. Thank you, Manoj. Sorry for joining late. I was quite busy for some emergency thing. So it is a sincere apology to all of you.
wonderful session. Great teamwork. So Prasoon, more of your hidden gems soon. Lots of companies, undervalued
Yeah,
companies.
we'll try. In current market scenario, it is very difficult to spot such margin of safety stocks. So let me try, and definitely I will share all my thought process, whether I invest or not, it doesn't matter. But I share it first to the people